Good afternoon to all. I'd like to welcome you all, and I'd like to call the hearing to order and acknowledge that we're in Treaty 1 territory and the home and the traditional lands of the Ojibwe, Cree, Dakota peoples, and in the national homeland of the Red River Métis. Our drinking water comes from Shoal Lake 40 First Nation in Treaty 3 territory. My name is Ron Merritt. I'll be your chairperson this morning or this afternoon. Panel member Linda McFadden to my right, and via Zoom is Linda Nesbitt. Our recording secretary is Stephen Lunn, and our assessor from the city of Winnipeg is Jonathan Spacek. We'll be hearing the application of revisions for the revision of the assessment roll in accordance with the Municipal Assessment Act. The matters for which revision is requested has been described in each application, and will limit discussions to those matters. The statements that are made at this hearing are sworn testimony, and anybody speaking in these matters must be sworn in. Please be advised that comparisons of assessment of properties are not considered market value by the Board of Revision. The board is appointed annually by City Council and is independent, along with the city administration. We make decisions based on evidence provided at the hearing and issue a written order that will be mailed to all parties as soon as possible. Please note that the board decision in respect to application may be appealed to the Manitoba Municipal Board if the matter pertains to assessed value or classification, or to Court of King's Bench if the matter pertains to application from exemption from taxation. Should you wish to appeal, information on how to do so will be included in the board's order. In respect to the hearing this afternoon, I will confirm the points of appeal with your property to be addressed with each applicant following the swearing in. We'll then have the assessor's testimony followed by questions that the applicant may have, and then it'll be the applicant's testimony followed by questions. Each party will have the opportunity to summarize if they wish. Once all evidence about the application has been brought forward, the applicant may leave. It'll be the process will repeat for each item in the docket this afternoon. The session will close after all applications have been heard, and the board will deliberate in private and make its decisions. You will receive the board order by registered mail as soon as possible. As information, all public hearings are live stream recorded and will be part of the public record. This afternoon, we have items that we're going to deal with, number 6 and number 8. So we will have our secretary, Mr. Lunn, swear in the assessor or affirm them, and we will also have the applicant sworn in.
Mr. Assessor, please state your full name.
Jonathan Spacek.
Do you affirm that the evidence you're about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do, thank you.
Thank you. And Mr. Applicant, please state your full name.
Thank you. Wesley Van Bruggen.
Do you affirm that the evidence you're about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do. Thank you.
Thank you.
All right, Mr. Spacek, Mr. Leslie is no stranger here, so we can go directly to the first property that we're going to deal with, which is 1345 Taylor. The floor is yours, Mr. Spacek.
Thank you, Mr. Chair. I have installed a new webcam here at the office, so just let me know, interrupt me if the sound is all right.
Yeah, it's you're quite quiet. Are you able to turn up your volume?
Yeah, I'll try. See if I can make some adjustments.
Jonathan, you okay?
Yeah, I'm just checking the volumes. If I talk louder, is that okay? Or can you turn it up on your end at all?
Are you okay?
I have it maxed out here.
Okay. A little bit more.
There's nothing left for me to turn up, but
Okay, we'll try at this end.
We'll just have to manage the volume as we go through.
Okay.
All right. Proceed.
Yeah, I will. Thank you. Today, we're looking at roll number 1209-780-6575. We're looking at 1345 Taylor Avenue. The 2023 value with the reference date of April 1st, 2021 is $5,471,000. If you look at my page 2, we have an aerial view of the property and a street view as well. This is a 3-story office building built in 1999. We have a gross floor area of 22,096 with a leasable area of 21,661. We can see as pictures on page 2, it's located at the corner of Waverly and Taylor. And at the bottom of page 2, you get a better picture of the parking that's surrounding the property, the entrance, and the building layout itself. If we turn to page 3, you'll notice that all of the questionnaires we've sent out for income and expense have always been returned. And in 2019, we received a sales questionnaire for this property because there was a sale prior to the reference date on February 6, 2019 for $7 million. When I put this brief together, I did investigate the sale, and on all counts, all the checks for it was an arm's length sale with nothing else included other than the building. If we look at page 4, this is the income approach that determines the value for the property. This is all model generated based on our OFS parameters. You'll see that we have 5 separate units within the building, split up, one larger one for 11,048 square feet. And when you add the smaller ones up, you get to our total leasable area of 21,661. If you look at the rental rates for the property, we have an average of $18.67. When we use our standard OFS parameters for the 2023 reassessment, you'll see we have a 6% vacancy rate for OFSs. We have 3% expenses, $8 for shortfall, and an overall capitalization rate of 6.55%. When these are all combined, the total value of this property for 2023 is at $5,471,000. If you look on page 5, we have included a list of sort of a global list of OFS, some OFS rents that were found across the city. You'll notice we've sorted them out from start date. So the near the top of our list is the most recently signed leases. I'll just point out, you'll notice as of January 1st, 2021 on 600 St. Anne's, unit 230. So this is a second floor unit at 600 St. Anne's, a very similar type of, office building in Winnipeg, a 3-year term, a smaller unit at 643 square feet, leased for $18. You'll notice another unit, unit 240, comparable number 9, 600 St. Anne's, signed late 2020, which is just prior to our reference date. Another 3-year lease, 1,200 square feet, 1950. You'll notice comparable 11, 1250 Waverly. We have a 3-year lease for 3,150 square feet, signed for $19 a square foot. We have another OFS, comparable number 15. This is 225 Vermilion Road, signed just prior to the reference date. 1-year lease for 7,000 square feet, 7,152 square feet, signed for $2,150. Again, just pointing out a few of the leases to make sure that our average of 1867 is within range, and it does not seem unreasonable for a newer built OFS with the location where it is. Our next, if we can scroll down to page 9, we've included the capitalization rate chart that we include with all of our appeals for any income producing properties. And you'll just notice the first rows of the chart are the office ones. We can consider this a suburban A or B building. All of our city of Winnipeg capitalization rates for this cycle, they range from 5.6 to 6.9%. Our subject property is at 6.55%, which falls pretty close to the middle of that. And you'll notice as well, if you scroll across for the suburban B, Colliers, they range from 6 to 6.75%. CBRE ranges 6.5 to 7 for suburban A. 7 to 7.5% for suburban B. And Cushman and Wakefield have a range of 6.25 to 7% and 6.75 to 7.75% for the suburban Bs. Again, our capitalization rate of 6.55% falls within all the ranges for the suburban OFAs on that chart. So it does not seem unreasonable. I've also included the mailer for this property. You'll notice if you turn to page 15, they've actually included a rent roll. You can see the different actual subject leases in this property. The first one is for the Element Consulting Group, which I do believe is owner occupied. I believe they're putting a book rent for $20. But the rest of the leases within the property, from my understanding, are arm's length. You'll see the second lease on that page, 5273804, which is Asante. It has a rental rate, base rent of $17.10. And under that is Prairie Trail Medical. They have a base rent of $17 a square foot. And under that, Prairie Trail Physiotherapy has a base rent of $17 within this building. So again, our $18.67 is within range there. And my last part of the presentation, if we just turn down to page 15, I'm assuming everyone has seen our COVID questionnaire that we sent out with the mailers. This building, it has, for the first question, it said there's been a moderate impact. And some of the questions they filled out were, it's made a difference. They put, number 2, were tenants at this location closed temporarily due to public health measures? Yes. And then question 6, have existing tenants requested rent deferral or rent abatements resulting from COVID? We have, if yes, briefly described. 1 tenant requested relief, rent was deferred for 2 months and then paid in full. Question 7, were new leases negotiated after the effects of COVID became apparent? And then they put yes. Well, they put if yes, briefly described, and they just put 2 months. And then question 8, have any of the existing leases been amended? And they put 2 tenants have had their leases extended due to the uncertainty, I'm going to guess, I can't read that, of COVID-19 in the future of the business. And then question 10, has the property received any government funded assistance grants or financial support? And they put yes, and they got 10, it says 10% wage subsidy only. So that's the kind of the information we received to see if there was a major effects from COVID. And I believe that is my presentation. If you have any more questions, please let me know. Thank you.
Thank you, sir. Wesley, questions of the assessor?
Thank you very much, Mr. Chair. If we can turn to page 7, please.
I am there.
Excellent. Thank you so much. So this is some of the statistics for the leases that you had provided on the bottom, or kind of on the top of page 7, correct?
Correct.
All right. So if taking a look, average CRU size 3,200 square feet, median is 1,600 square feet. So you'd agree that the typical lease within all these leases is quite a bit smaller than 2 of the spaces in the property.
Agreed.
Okay. And then when I take a look, I see though there's a weighted average. So when they calculated the weighted average, how is that calculated?
You're taking the total size of all of like each unit and you're associating that rent for that unit. So you're finding the average rent per square foot of each size. So if it's a larger, it's taking into account any really large leases within our 89 comparables, as opposed to just doing each one and taking the average of just the rent.
Okay, so when
taking the size into account.
So the weighted average of fair statement would be that it takes more so into consideration the size of the lease. It would take that.
Yes, absolutely.
Okay, so I'm taking a look and it says the weighted average is $16.01. So would that not suggest that that $18.57 might be a little high then, if we're looking at a weighted average of $16.01? If
all the properties on this sheet were exactly the same as the subject, yes, but we have a wide range of properties on here. We don't just need to go to the average, if that makes sense. The average is because there is higher and there is lower. Lower can often be because of the condition, location of the property. And when I have a property that's, what I would consider superior in a better location than some of the other comparables, then there's a reason for it to be above the average, if that makes sense.
Okay, Fair enough. I think that concludes my questions. Thank you very much, Mr. Chair.
I thank you. All right. Linda, do you have any questions of the assessor?
I don't have any questions of the assessor. Thank you.
Ms. Nesbitt?
Just a quick one. So the 6% vacancy rate, is that a model rate?
Yeah, that's driven from our, like, we'll do say a vacancy study or whatever you want to call it. The vacancy is looked at for like any time before the reference date for similar types of properties. And then a vacancy rate is derived from that. So what was determined is looking at the OFSs across the city, up to April 1st, 2021, there was an average vacancy of 6%.
Okay, so it's just based on OFSs.
Yeah.
You're saying, okay.
As best as we can.
Does it take into account that COVID questionnaire? Or does the model consider all that?
Well, so when like that mailer is that COVID questionnaire is added on to our income and expense mailer, which has taken all the information from 2020, the year prior to April 1st, 2021. So it's taking into any effect COVID had up until April 1st, 2021, if that makes sense. And
Yes.
yeah, so whatever the vacancy is they're putting on their income and expense mailer for 2020, that's what's being taken into account up till that date. So I don't know how much of an effect COVID had up until then, but that's, we're taking into account the information up to that day, whatever is sent in from the mailer. There's
Okay.
no, because we are taking it into account with the information that's sent in alongside it, if that makes sense.
Okay, yeah, I just wanted to be clear in my head that the model vacancy rate considered the impact on vacancy because of COVID.
Yeah, it's whatever information was sent in until that date, and then the next reassessment cycle would have from, looking at the year before the reference date, so we'd have more, to see what the effect was up until then, and if there's a difference, then we'll know, kind of thing. But we just have up until the information we're given up till April 1st, 2021.
Okay, thank you very much. That's all my questions, Mr. Chair.
I thank you. Mr. Spacek, everything is model driven for the subject property.
Yes.
So the cap rate is in accordance with all the data you have, and the age of the building is 1999. So you feel as if the cap rate is applicable for that age of a property?
I trust the model and the cap rate that has been given to this one based on the age, location, size. Yes.
And I think Mr. Spacek, you did allude to the fact that there was a sale on the property in 2019 for $7 million, but it's probably some sort of a portfolio and consistent of some other properties too.
No, it was just a sale for this property. I reviewed the mailer, and it was an arm's length sale, just this property for $7 million.
All right, I thank you. Wesley, we're ready for your presentation.
Excellent. Excellent. Thank you very much, Mr. Chair. When ready, if we can turn to page 3 of my submission, just let me know when you're there.
I think we're all ready.
Perfect. Thank you so much. So just to kind of give Cole's notes, I'll start at a high level view on the property, giving some general information, and then move fairly quickly down into the issues at hand here. So as mentioned, the property is a 21,661 square foot, should be read office property. Year of construction is 1999, and it sits on 1.1 acres of land. The property has been assessed at a value of $5,471,000. M&P is requesting a value of $5,125,100. If the board will turn with me to page 5. On page 5 here, we have our valuation. So our issue really is in regards to the capital, or is in regards to the vacancy rate applied to the property. So that vacancy rate should be 10%. As well, we do have an issue with the rental rate for this particular property.
Rental exactly the same.
Yes, I do see that. And you know what, I'm at a bit of a loss why why that should be the same. So, I mean, maybe what we'll say is it's either the vacancy rate or the rental rate. We'll go down that road. I do apologize to the board on that one. I do see that there is no change there, so I'm sorry about that. If the board will turn with me to page 10. And just let me know when you're there. We're all there? Perfect.
Okay,
So as mentioned by the assessor, the property has been assessed with a blended rental rate of $18.67 per square foot. However, in 2018, the property is generating rents of $17 per square foot. This was the same. This is continued to be the same for 2021. Here we provided just two tables showing what those rental rates were for 2018 as well as for 2021. So you can see that actual rents the property is generating are, you know, about $1.50 per square foot less than what's been assessed for that particular property. Additionally, we've taken a look at other properties within the market, and unfortunately, we don't have a ton of leasing information. So what we've done is we've looked at asking rents for these particular properties. We've shown the properties there. We have 1780 Wellington Avenue. There's 1,502 square feet of space. The listing date was September 2018, and the asking rent was $15. So this is the office building over by the airport on the corner of Wellington Avenue there. Then we have 52 Donald Street, 4,300 square feet. Again, asking, or it was listed October 2018. Asking rent was $19, but that was a gross lease. 355 Portage, 653 William, 25 Scurfield. When we take a look at each one of these, again, we see leasing as we go through here, ranging from about $12 to a gross rent of $23 per square foot. So we're taking a look at this information. You know, again, understanding the city has assessed the rents based on their model, and they're saying that the property could generate rents of $18.67. However, based on the actual performance of the property and what we're seeing within the market, it would be our position that that rate should be closer to $17. Here, if the board moves with me to page 11, here's where we'll add the OR. So I guess the other thing would be the vacancy rate. So the city has assessed the property with a vacancy rate of 6%. However, when we look at third-party market reports, we're getting vacancy rates for suburban office A class properties quite a bit higher. So according to the Johnson report, when we take a look, we can see that the vacancy rate for 2020 for suburban A class properties was 11.2%. And we can actually see that it had gone up, that goes up for 2021. 2021, of course, is post-fact. But again, this just gives a sense of where we've been. And just to step back for a moment, you can actually see that vacancy rate increased substantially between 2019, when it was 3.8%, to 2020, when it jumped to 11.2%. You know, a huge component of that would be due to the pandemic. Obviously, due to COVID, there's been a shift in the way a lot of work has been done. There has been more of a focus on a hybrid model, particularly for offices. And we certainly see that more being acutely felt within the suburban office market, where there's a bit more you know, you see more of those hybrid work arrangements, working from home, working in the office. And as a result, a lot of tenants don't need as much space. They're certainly willing to drop space, and that results in that increased vacancy rate for the market. Additionally, if the board will jump down with me, and I apologize, we're going to jump just a little bit here. If the board will jump down with me to page 55, please.
I don't have a 55 on 21.
Should be in the bottom right-hand corner. It might be a little bit. It's probably competing a little bit with an Avison Young kind of footer there. It should be M&P 55 of 90. It should read Avison Young office market report, second quarter 2021, Winnipeg, Manitoba. If you just, were you able to find that there?
I haven't, yeah.
All right, perfect. So here we take a look at what Avison is indicating as well. So we can see that the average there, Avison Young is indicating that the average vacancy rate has increased to 12.4%. So that's been an increase for what they've seen within the office market. If we move to the next page, page 56, this is from CBRE. And this is in regards to, if the board turns with me to page 58. On page 58, unfortunately, the CBRE doesn't actually split out the A's and B's in the market, but we can see that B properties, they look at all properties the same, are that 10.4% for the suburban office market. Finally, if the board will turn with me, starting on page 60, this is Collier's Q2 2021. And if the board jumps with me down to page 62. Again, well, we don't see that, well, Colliers doesn't recognize any A properties in the suburban Winnipeg market. We do see that the B suburban vacancy rate is 10.8%. And the same thing would hold on the market beat that you can find on page 64 and 65. Again, showing that vacancy rate is up for the A-class properties. So again, based on that, it would be really our position that when we take a look at the property, that 6% vacancy rate just is a little bit too low considering market conditions, particularly when we're looking at third-party market reports. And we're just, it'd be our position that we should be looking at a vacancy rate probably closer to that 10% mark. If the board can jump back with me to page 12. And just let me know when you're there. Excellent. So in regards to the sale price, so the property was purchased in 2019 for $7 million. We don't dispute that. However, what we will say is that when properties are purchased, they're purchased for a variety of different reasons. We know that the property was purchased to be used for, in no small part, for the use of the owner's business. And when we take a look at other sales that have occurred, kind of similar sales, we can see we've identified 3 other sales that have occurred within the same time frame. We tried to match them up as best as we could. We have a property at 730 Taylor. This was a 2002 year of construction. The building is a little bit smaller at 10,024 square feet. It sold within relative, October 5th, 2020, so reasonably close to the subject property sale date. 2.5 million, so $254 a square foot. We can see we have another property at 1046 St. Mary's, 1998, so similar year of construction, smaller certainly at 4,490 square feet. We can see this property sold in January 2018, and it sold for $182 a square foot. And then finally, we have 103 Scurfield, 1990, so a little bit older, 4,388 square feet, so a little smaller. Property sold November 2018 for 1.23 million, $280 a square foot. So the reason I'm going through this and explaining this to the board is when we take a look at the other sales within the market, we can see that they are transacting at lower values on a per square foot basis, really suggesting that maybe that $326 is a little bit high for what we would have expected for the market. Understanding the city's not using that $7 million as for their valuation for the property, but just to show the board, when we're taking a look at that value, that $7 million, it may not necessarily be fully representative of what we're seeing within the market and what it would be. So again, just suggesting that when looking at it, just add a grain of salt as you're considering that. So once we take a look at the property, it really is our position that when we take a look at the rental rates, that, you know, that rental rate at $18.57 seems a little high, or 76 cents seems a little high. You know, it seems to us that a rental rate closer to 17 would be more reflective of the actual performance of the property. Or alternatively, when we take a look, you know, again, there's that vacancy rate where we feel that vacancy rate's a little bit low at 6% and would be more reflective at 10%. Again, you know, understanding there's always a bit of a relationship between vacancy rate and the rental rates. You know, again, it tends to be as vacancy rates go up, rental rates drop a little bit. So, you know, in this case, why don't we say that we only chose one to avoid double counting, and we can pretend that's what we did. That was the reason that we only adjusted one. Ultimately, we feel that that value of, you know, $5,125,000 would be reflective of the value of the building, you know, regardless of how you look at it, whether it's the reduction of the vacancy, whether it's an increase in the vacancy rate to 10% or a reduction on the rental rate to that $17 a square foot there. Continuing on, so pages 24 to 32. Or sorry, I guess 33 is just supporting documentation. Again, this would be the income and expense statement provided by the owner. Page 35 to page 43 are just the information regarding the lease comparables that we've used and the asking rents that we've used in providing the supporting documentation there for the board's reference in terms of where we gather that information. On the top of page 36, you can see this. You can see that property at 1780 Wellington Ave. You can see that there are the two spaces in there for $15 a square foot. Admittedly, the spaces are a little smaller, but again, we do feel that $15 would be a pretty reasonable reflection of what we would be looking at. Page 44 to 51 are just pictures of each one of the comparables that we used when taking a look at that. When determining what a reasonable rate would be for the property, just so the board can take a look and see what we've considered to be similar and what leasing the buildings are coming out of. So as you can see, page 46, we have 355 Portage Avenue. So relative, you know, certainly a newer, more modern looking building. Page 49, again, we're taking a look at a lot of the leasing is coming from newer properties. Again, we feel would be representative and supportive of that reduction in rental rate. Page 53 and 54 is the Johnson report, just showing the A-class suburban rental vacancy rate at 11.2%. And then finally, starting on page 66, continuing into the end of the submission, is the City of Winnipeg's valuation of income producing properties, just in case there are any further questions that might come up. With that, I conclude my presentation, and we welcome any questions from the board or from the assessor. Thank you.
Thank you. Mr. Spacek, questions of the applicant?
Just quickly, just regarding the vacancy rate, when you looked at the subject property, did you notice any issues with vacancy in the history of the years that you looked at?
No. So the only information would be the fact that there obviously was some closures during COVID, but beyond that, I don't believe, as far as I'm aware, for the last little bit, since 2018, there hasn't been a vacancy issue within the property.
Thank you. And just regarding the sale price, did you look, and I will just state it, but if you look at the assessed value for 2023 per square foot, it works out to approximately $248 a square foot. You would agree that that's, you know, within range if you're looking at 730 Taylor on your page 12, and it's within range of all your sales. Would you agree?
Yeah, sure. I think when we're taking a look at the information on page 12, we're just taking a look at that sale price. Really what we're looking to show is the fact that there are other similar properties selling in the market for values that are quite a bit lower. Just kind of supporting the fact that that $7 million, you know, may not be absolutely reflective of what would be able to be achieved if that property were put on the market. You know, beyond that, we're looking at the income parameters to try to figure out what a reasonable value would be for that site.
Okay, and so, and just to follow up, you would agree that the assessed value per square foot of 247 is much closer to the range of the comparables you have there.
Again, we're looking at 18 and 19 sales from around the time of the sale. So a little bit dated, rent, obviously vacancy has gone up quite a bit since 2019, which would obviously have an impact in terms of what a value for the property would be as well, particularly within the market. Even though the property is fully occupied, with that higher vacancy, typically you're going to see some trade-offs between rents and a little more reluctance to pay top price for a property. So
great, thank you so much.
Thank you.
Questions.
Thank you. Ms. McFadden?
My question was related to the actual vacancy rate of the building, but I think you've already addressed that. So thank you. I have no other questions.
Thank you. Ms. Nesbitt?
Yeah, I was also interested in the actual vacancy rate too. I note that also with regard to the sale information you brought on the rates per square foot, your request of $5,125,000 works out to about $236 a square foot. So that's at the low end of your sales. Do you find that to be reasonable?
I think.
Go ahead.
Oh, sorry. No, so I think when we take a look, we know that there has been a significant, there's been a huge change within the market. I think when we take a look at it, I'm not certainly with the impact of COVID, and what the impact has been in terms of both working from home, as well as more hybrid work arrangements. We've certainly seen that impact both on the market in terms of what that's done with the vacancy rate. We can see on page 11 that the vacancy rate has gone up substantially from 2019 to 2020. So again, I do think, understanding we certainly are on the lower range, but I do think there has been a shift, and what we have seen in the past being purchased might not necessarily be representative on a price per square foot of what we would see, as of April 1st, 2021, given some of these changes we've seen.
And I appreciate that there might be a shift, but is it a blip or is it a trend? I mean, we don't know if it's a trend yet because we can't forward. We can talk about a whole bunch of predictions, but it's not a trend until we've seen it, right? So, right. So I'm just wondering, is it a blip or is it a trend? I'm kind of, don't know yet.
I think I think a lot of people are asking that question. If I had any insight, I'd throw a ton of money into the market and make a lot of money, but unfortunately I don't. I think what we can see is on page 11, we do see that the vacancy rate has continued up for 2021. We went from 11.2 reported in 2020 to 15.6% reported in 2021. We did see that increase. Now, are we going to see everyone coming back into the office? Are we going to see tenants, when they're looking at renting space, taking up the exact amount of space? It's hard to say. My conversations with landlords has been that typically when tenants are looking for space, they're looking for less space than they had historically, because they are seeing more of these flexible work arrangements, work from home some days, work in the office other days. But whether that's going to continue on in the future, unfortunately, I couldn't tell you.
Yeah. Okay. Thank you very much.
Thank you.
No further questions, Mr. Chair.
I thank you. Wesley, these properties are normally valued on the income approach?
Correct.
So I have to ask you the question, why would you throw in a sales comparison approach or, dissect it that way?
Well, so the reason I threw that in was because we're aware of the sale price at $7 million on the site. And what we wanted to look at, and the whole reason that information was there was just mainly to show what other properties were selling for in the market at that point in time, to suggest that $7 million might not be, if they hadn't bought it for 7 million, that might not be necessarily what a value someone else would pay for the property is. So it was really more so just to look at that sell price, show that that was probably higher than what would be typical within the market. And when we're looking at the value for 2021, we're certainly looking at what the income parameters are. So what's the correct vacancy rate? What's the correct rental rate for that property when determining the value?
So there's no, you're not disputing the cap rate because you're both the same. So you're accepting the city's cap rate, or
No.
it agrees to your cap rate?
Yeah, we don't have an issue with the city's cap rate. The cap rate used seems reasonable. In terms of the operating expenses at $8, again, that might be a little bit low, but it didn't seem too out of line for what we would expect. It really is, when we take a look at it, either the rental rate of that property, at that 1856 or 1867 is a little bit high, or the vacancy rate applied to the property 6% is a little bit low, depending on which, as we look at it.
I thank you. Either party wants summation?
I'm fine, thanks.
Mr. Chair, I did send a rebuttal document today. I'm not
Okay.
sure.
Okay, we'll deal with that then.
Can I take a moment recess to distribute that then?
Okay. We're gonna take about a 5-minute break, and then it'll be submitted so we can all get it. Because right now it's not, the secretary has not included it yet.
Okay.
So let's just take 5 minutes. All right, we'll call our hearing back to order, and we're going to deal with the rebuttal that the applicant has. So Wesley, whenever you're ready, you can take us through your evidence there for the rebuttal.
Excellent. Thank you very much, Mr. Chair. So if the board will turn with me to page 2. So this is just in rebuttal to the leases used on page 5 to 7 of the submission from the assessment department. Here we took a look at the leases. Here we took a look at leases over 5,000 square feet. We know the reason we did that is we have 2 spaces within the building. One is 11,048 square feet. One is 5,050 square feet. So we took a look at those, combined all the leases used over 5,000 square feet. And then from that, we determined that the average of these leases was $16.01 and the median was $15.50. So again, taking a look at that, it really would be our position that would support a lower rental rate at $17 per square foot for this particular property. And then pages 3 to 7 was mainly just to support the fact that the 11,000 square feet space was leased by the owner occupier within the building. But that's already been stated, so that we don't need to go through that. Anyway, that concludes my rebuttal, and I welcome any questions. Thank you.
I thank you. Mr. Assessor, questions?
No questions, thank you, Mr. Chair.
Hey, Linda, any questions?
I have no questions. Thank you.
Thank you. Ms. Nesbitt?
No questions, Mr. Chair.
No. Okay. Summation, either party?
No summation here, thank you.
And I think I'm
further? Anything further?
And
No?
I think I'm good, Mr. Chair. I think we've said
All right. So we'll move on to the next property, which is 150 Henry Avenue. Mr. Spacek, whenever you're ready, you can take us through this property.
Thank you, Mr. Chair. If everybody could just turn to page 1, we are looking at roll number 13099069120. This is 150 Henry Avenue. We have roll year 2023 with a value of $6,604,000. I guess right now is a preliminary issue, and I've spoke with the applicant about this, but there is cost and liability, I believe, checked off on this one. Did you want to deal with that first, or do you want to have that?
I'm sorry, I can't really hear you, Jonathan.
There is cost and liability checked off on this one.
Oh, my file just says liability and amount of assessed value.
Yeah, liability, sorry. So did you want to deal with that first, or how does the panel want to do it today?
Wesley, are you appealing liability?
Yeah, so we have had a conversation with the assessment department. They are looking into this. It's just we are aware they're looking into it, but it is a bit of a longer process. So what we'll be doing is we'll just be asking the board to confirm the issue on the question on liability, and we'll just be proceeding on the question of value. And then we'll be working with the city behind the scenes on getting this figured out.
All right, so you're seeking to confirm the liability?
Yeah, and then we'll just pursue on the value, and the city, we'll
Okay.
figure it up with the city.
So then we'll deal with quantum. So Jonathan, you may proceed with your presentation.
Thank you. So again, I'll go to the middle of page 1. We have the 2023 value of $6,604,000. And if we look at my page 2, you'll see exactly where this property is located. We have a 5-story office building located off a corner of Disraeli and Henry. This is just as you come south over the Disraeli Bridge and you're coming up to Main Street. You'll notice the large MMF symbol on top. So this building was originally built in 1958. We have a gross floor area of 113,934 and a leasable area of 70,349. This building has an effective age of 1980. You scroll down to past my pictures and we go to page 5, you'll see the income workup on how this building is valued. So you'll notice we have 3,000 square feet at $12.99. We have 66,349 square feet at $11.07. And 1,000 square feet at $14.02. This is our OFC class of building. We have a vacancy loss of 12% for all OFCs this cycle, 3% expenses, $10 shortfall, and an overall capitalization rate. You'll notice it's at 8.9%. This is to represent the age, size, and the location of the property. So it's higher than most OFCs. If we turn to page 6, you will see my comparables. So again, to find a large OFC of this size, you're not going to find too many in Winnipeg, but the ones I have put together is I tried to find the largest square footage of OFCs. You'll notice comparable 1 is the largest, 36,000 square feet at 195 Fort. Again, 1979 year built. And it has a $16.35. So again, way above our model rent. It's a superior building. But if you look at my last comp, comparable 9, this is 280 Main Street. This is a larger 2-story OFS on Main Street. It has an average year of 1975 built, 2 floors, 5-year lease at $11 a square foot. If we turn to page 8, again, this is the capitalization rate sheet we went over before, but we do not have a class for the OFCs, and we are at 8.9%. So it's well above any range of, downtown office we have on this list. We turn to page 10. We have the actual income and expense mailer sent in from the owner, and you'll notice there is a gross lease in place for this property. You'll see that their leasable area, they fill it out as 93,000 square feet. We are only doing a leasable area of this property of 70,000 square feet. So we're missing approximately 20,000 square feet on this property. But you'll notice the rent income is $1,222,000, and you'll notice that their expenses in the middle of the page near the bottom is $522,000. They're reporting a NOI on this building of approximately $700,000. And our model workup using lower square footage at arguably a higher rent rate is working out to $787,000. So we are higher on the NOI by approximately $78,000 than they are reporting. And if we turn to page 11, you'll notice we have the actual lease. Again, we have 93,000 square feet with a monthly rent of $101,000. And again, they're filling this out as a net lease on this page. but they're showing no recoveries. And again, nothing really stuck out on the COVID questionnaire. That is my presentation. If you have any more questions, please let me know.
I thank you. Questions of the assessor, Wesley?
No, I don't think I have any questions at this point in time. Thank you, Mr. Chair.
Ms. McFadden?
So just to clarify, Jonathan, your assessed value does not take it only is talking about 70,000 square feet, not 90,000, which is what they're actually
Yes,
reporting on.
that's how this income approach is working up. Again, this building we haven't been in or had a floor plans in a while. We have received the applicant's exemption request. So what we'll be doing after this in sometime in the near future is doing that full exemption request for this property, going through it, inspecting. I'm sure there will be a cleanup with exemption, and then there'll be, I'm going to guess, a cleanup with value as well. So again, a supplementary notice, most will be coming out on this in the future. But as of now, yeah, we have 70,000 square feet, and they're reporting 90,000 leasable. So again, something needs to be cleaned up in this building.
Okay, thank you.
I thank you. Ms. Nesbitt?
Yeah, just on your cap rate, can you explain to me why there is such a high cap?
Yeah, from my understanding, the OFCs on average are a little higher in most cases, but when we have such a large building in the location that it's in, it's, the biggest two that are leading to this is, you see the building, it's an older building. You see the location of it, that's a tough location for a large office space. You're right at the bottom of the Disraeli Bridge, you're right near Main and Disraeli. And then, yeah, size and quality, like it's been, the parameters of it are, showing that it's a less desirable investment compared to other OFCs of its type.
Okay, and can you explain to me again, because I can't keep it in my head, the difference between an OFC and an OFS? Okay, so an OFS is our standard suburban office classification. So it's usually only up to 2 stories, sometimes 3. But then you have an OFA, which is like top of the line Portage and Main buildings, right? That's OFA. OFB is when you're not quite in office tower, of that stature. You're just under that. You're a large size, lots of amenities. A nice government building on Gary, like 280 Gary. Or sorry, I might have the address wrong, but there's a lot of OFBs downtown, 440 St. Mary's, stuff like that, Great Westlife building. And then you're going to go down to your OFC, which is, the classification under that, which is, you're not exactly an OFB. You have usually smaller in size, less amenities, following, that's what's classifying it more of an OFC. And then even one more under that is an OFD classification. That's the old office downtown, which is, you're looking on McDermott Street, a 15-story building that's, the original hardwoods, not in great shape, lots of square footage, but yeah, that's my quickest rundown of some of the different office classifications. Okay, no, that's great. Thank you very much. No further questions, Mr. Chair.
Thank you. I have no questions. So Wesley, your presentation.
Thank you very much, Mr. Chair. If we could all turn to page 3 when ready. And just let me know when you're there.
All right, Wesley.
Excellent. Thank you so much. So as mentioned, the subject property is an office property located at 150 Henry Ave. The property is situated in the South Point Douglas neighborhood, and the income approach has been used to value the property. The property has been assessed at a value of $6,604,000. MVP is requesting a value of $3,022,800 for that. If the board will turn with me to page 5. On page 5, we have a requested assessed value. Here we are looking at a couple different changes. So one is a change for the potential income of the property. So the city has the excuse me, I apologize. The city has a property assessed with a potential income of $787,473. MVP is requesting an income of $547,315. Then next is the vacancy rate. The city has used a vacancy rate of 12%. M&P is requesting a vacancy rate of 19.5%. And then finally is the capitalization rate. So as mentioned, the city has assessed the property using a capitalization rate of 8.9%. M&P is requesting a capitalization rate of 9.6% for this particular property. If the board will turn with me to page 12. And just let me know when you're there. So the property has been assessed with a blended rental rate of $11.19 per square foot. This is up 43% from the last assessment cycle, where the rental rate was $7. The blended rental rate was $7.78 a square foot. So a fairly substantial increase in rental rate for this particular property. Additionally, when we take a look at what's been happening to overall rents within the market, what we've done is we've looked at CBRE's market research from Q2 2021 in terms of what's happening to the net rental rates within the downtown market. What we can see is that there had been rental rates have been relatively flat or down a little bit, depending on the class of property from the previous assessment cycle. So this is kind of going all the way back to Q2 2019, and we can see that there has been that flat change or no change at all. So when we take a look at that, it really brings forward the question: why are we looking at a 43% increase in rental rates when we have not seen that being bore out within the market? There's no market evidence that should suggest that rental rates have been changing at all. On page 9, if the board will turn with me to page 13. So on page 13, we have the information in regards to the vacancy rate. So as mentioned, COVID has been hard on office buildings, with more people moving to a hybrid working model. With more people working from home, tenants don't need as much space. And as such, we've seen a flight to quality. So we've seen tenants, when looking at buildings, are shifting their focus and tending to choose better quality buildings versus the lower quality buildings. As such, we're seeing the lower quality buildings suffering. Here we can see that there has been an increase in the vacancy rates for the C-class properties. Oh, sorry, is someone asking a question?
Oh,
Okay.
No.
My headset made a funny noise. And what we can see here is we can see that when we take a look at vacancy rates for C buildings, we can see for 2020 that vacancy rate was 19.5%. So up quite a bit from 2019 at 13.7% and up from 2018 at 9.7%. So we can see there has been that increase there in terms of the vacancy rates for these C-class properties. Again, so when we're taking a look at what the implications of that would be in terms of the valuation for the property, I realize we're at 12%, but we really do feel that that does not quite capture the impact of where we are within the market. The board will turn with me to page 14. So what we've done is we've also taken a look at 3 properties that have recently transacted. These sales occurred between 2016 and 2019, recently being a relative term. These properties are 138 Portage Ave East, 294 to 304 Portage Ave, and 433 Main. So located within the downtown area. Buildings have years of construction between 1909 and 1977 and have building areas ranging from 55,125 square feet to 140,639 square feet. To calculate the net operating income, what we've done, if the board will turn with me, I apologize, give me 1 second here. If the board will turn with me to page 47, please. And just let me know when you're there.
good.
Excellent. So what we've done is you can see the capitalization rate.
Hang on for a second, sorry.
That's okay.
Oh, sorry.
Okay,
Well, everyone's there? Page 47?
yep.
Okay.
Yeah.
And it should read capitalization rate parameters. Is that correct?
Yeah.
Perfect. So what we've done so unfortunately, while we would love to have the income for each one of these properties, that is not something that we find ourselves in the position to be able to gather. So what we've done is we've taken a look and we've determined what an appropriate rental rate would be for these properties, applied a vacancy rate, non-recoverables, a shortfall amount, as well as calculated what the net to calculate what a plausible NOI for that property would be. So we can see for 138 Portage Ave, this sold in 2016. So for this property, we used a blended rental rate of $7.78, since we feel that would be an appropriate rental rate. We've used a vacancy of 14.5% to account for what that vacancy was within the 2016 market at that point in time. We've taken a look at use a 2% non-recoverable, $7.50 shortfall to calculate a net operating income of $299,404. Divided by the sale price of that property, we're getting a capitalization rate of 11.74%. We've done the same thing for the other two, so 294 to 304 Portage Ave. We've used $11 rental rate for that property, vacancy rate of 19.5%, non-recoverable of 3%, shortfall $10, calculating a net operating income of $924,596 and a calculated capitalization rate of 8.9%. And then the same thing for 433 Main. We use a slightly lower rental rate at $9, same vacancy rate of 19.5%, non-recoverable 3%, and a shortfall of $10. From that, we've resulted in a capitalization rate of 9.6%. Starting on page 49, starting on page 50, what we can see is some of the properties we consider when determining a capitalization rate. So on page 50, we have asking rents for 428 Portage Ave. You can see $11, 230 Princess Street, $11.50. If we continue on down to page 52, we can see that there's some additional leases from 428 Portage Ave, all at $11. And then if we continue on to page 56, we can see 123 Main Street at $13. So again, when we take a look at the parameters that we've used for the capitalization rates, again, while they might not be exactly what the properties are generating, we feel that they'd be a reasonable reflection of what those properties would be expected to achieve within the market to try to calculate a capitalization rate for those properties. So considering those capitalization rates, so we've got 3 capitalization rates. If the board will turn with me back to page 14. I'll just give everyone a moment to get back. And just let me know when you're there.
Okay.
Excellent. So you can see that we've got our 3 properties with our calculated capitalization rates ranging from 8.09% to 11.74%. Taking a look at the median, we've got a median of 9.6% and an average of 9.81%. So again, when we take a look at these, we feel that a capitalization rate of 9.6% would be reasonable for the property. We've also provided a map of those sales for the board's consideration, where those properties are located. So you can see 150 Henry is located, over by kind of in the worst location out by South Point Douglas. Then we have 433 Main that's located in the Exchange. And then we have the other 2 properties, 138 Portage and 294 Portage, located closer to the downtown core. Page 15, we have pictures of the properties. So the first one we have is 294 Portage. You can actually see the property has both retail and office components within the property. This is located right on Portage Ave. So again, for this property, just as a reminder, we had felt a rental rate of $11 was reasonable, in part because of that retail space on the bottom floor there, and in part because of the location of that property. The next page, page 16, is 433 Main Street. Again, when we took a look at this property, we felt that we've used a rate of $9 per square foot for this property. Again, we didn't. Part of the reason was this property didn't have any retail on the main floor, and taking a look, we felt that $9 would be a reasonable rate. And then finally, on page 17, here we have the sale at 138 Portage Avenue. Again, for this property, we've used a blended rental rate of $7.78, much the same as the value request that were made, or the rental rate we're requesting for the subject property. So again, when we've taken a look at these properties, we try to line them up in terms of location, as well as age of the property, and as well as similar in terms of type of the property when we're trying to determine what sales should we be looking at when determining capitalization rate. Finally, if the board turns with me to page 18. So the subject property had with the full value of $6,604,000, that equates to a value of $93.88 per square foot. When we take a look at these three sales, we see that these three sales were selling for prices between $46 and $82 per square foot. Again, we're not necessarily using these. We're not using a sales comparison approach for the property. We are using the income approach, but it's also helpful for us to double check our value. So using our requested value of $3,022,800, that equates a value of $46 per square foot for the site. So kind of right within the range of what we're seeing for other sales selling within the market. So again, we're not using the sales comparables to necessarily determine what the value would be. It's more so to show the board what these properties are selling for and how does our requested assessment line up with the sales within the market. Page 20, we have our conclusion. So here again, we're taking a look at that property and the parameters that we've outlined there before the board, resulting in that value of $3,022,800. Page 29, we have some of the market reports that we've looked at. So we have Colliers Q2 2018. So we've got a Colliers Q2 2018 market report. And what we're looking at is trying to determine what has been the impact in terms of C-class leasing. So if the board will turn with me to page 31, and I'll just give a moment to get there.
Hey,
So what we can see is in 2018, the second paragraph, the second sentence on the top of that page, Class C is reporting a broad range of net rents between $9 and $17 per square foot, with a raise in weighted average of in the suburban factor to $13.99 per square foot. So we can see the average rent coming from C-class buildings in Q2 of 2018 was about $13.99. If the board turns with me to page 36. This should be the Q2 2021 market report for Colliers. And just let me know when you're there.
hey,
All right, so here we can see if we look in the second column, kind of midway down, almost in the middle of the page, it should start with Class C suburban. So again, we're taking a look at the rental rates that we're seeing is at $12.12 for Class C suburban is at $12.74 per square foot and $12.12 per square foot for Class C downtown properties. So what we can see and what the reason we provide this information is that we actually we know that in Q2 2018, Class C properties were kind of at $13.99 was the average. Here in 2021, we see that rate is $12.12. So certainly not an increase in rental rates over that time frame. Additionally, if the board turns with me to page 38.
okay,
Here we can see the vacancy rate. Again, this has been reported by Colliers. We can see that downtown C-class buildings, they're reporting a current vacancy rate of 17.8%. So again, we can see that vacancy, as well as a weighted average net asking rental rate of $12.12. So we can actually see that rental rate is quite a bit higher than the current assessed 12% for the property. If the board will turn with me to page 40.
Okay.
So here we have the CBRE Q2 2021 market report. Page 41, we have that graph that at the bottom there that we have shown the board previously in terms of the average net rental rates per square foot and what the impact has been over the time frame, showing that rental rates for Class C properties has not changed. Certainly not gone up by 43%. And then if we go to page 42, here we have Class C downtown office properties. We can see that CBRE is reporting a 17.7% vacancy rate for Class C properties for Q2 2021. So again, quite a bit different than the 12% that's been applied by the city of Winnipeg. Page 45 and 46 is the Johnson report for downtown, just showing that when we take a look at page 46, this is highlighting that 19.5% vacancy rate that we've already discussed. Page 58 to page 63 are just the sales that we've utilized. So you can find the sale at 138 Portage Ave East on the bottom of page 59, showing that this property sold in 2016 for $46.26 a square foot. Page 61, we have 294 to 304 Portage Ave. Here we can see the property was purchased. This property was purchased in 2018 for $82.09 a square foot. And then finally, we have, you can find on page 63, the property at 433 Main. Following that, starting on page 65, continuing on to the end of the submission is just information, is just the city of Winnipeg's 2023 general assessment evaluation of income producing properties. With that, I conclude my presentation. I welcome any questions from the board or from the assessment department. Thank you.
Thank you. Questions of the applicant?
I have no questions. Thank you.
Ms. McIntyre.
McFadden.
McFadden.
I note that on the information that this property provided to the city, they're saying that they've had minimal impacts due to COVID. Do you have any evidence that, well, you've shown us a lot of evidence that the market is showing a much higher vacancy. Is there any evidence at all that this property has actually suffered an increased vacancy rate or a decreased rental rate?
No. So the property's leased by the owner and the tenant are related. So no, there is nothing to suggest that there's been vacancy issues with the property.
Okay, thank you.
Ms. Nesbitt?
No questions, thank you.
I just have one observation, I guess, Wesley, and that is you developed a cap rate for the property, and it consists of more or less 3 properties. So do you feel like that warrants, wouldn't your search for, cap rates encompass more comparables?
It would ideally encompass more comparables, it's true. Unfortunately, when it comes to this type of asset, there aren't a lot of, there don't tend to be a lot of sales, and there hasn't been a lot of sales as of recently. So we kind of use the best information that we have available, particularly when we're trying to find a comparable for a building located in South Point Douglas. It just becomes, a little challenging to find something like that.
All right. Summation, either party?
I did have, sorry, and I maybe I'm doing this wrong time. I do have a brief rebuttal for this as well. Should have been sent last night.
Okay,
So we can distribute that, kind of take another 2-minute recess to distribute it.
okay. We'll take a probably a 2-minute recess, and we'll shut it down, and our secretary will key up the rebuttal. Okay. We'll call the hearing back to order, and we're going to look at the rebuttal information. Wesley, you can start your rebuttal information.
Excellent. Thank you very much, Mr. Chair. So 2 areas we just want to make sure that we're looking to rebut. So the first, if the board will turn with me to page 5 of that document. And just let me know when you're there.
We'll always catch up to you, okay? So proceed.
Sounds good. So this is in rebuttal to the 9 comparables used or provided, or rent comparables provided by the assessment department. So what we wanted to do is we wanted to show the location of where those properties are and just highlight the fact that none of these properties are actually in, they're in kind of close proximity, but they're not particularly close proximity to the subject property. So the orange pin that you can see over in St. James Industrial, that is leasing the lease from 1780 Wellington Avenue. So that's located all the way up by the airport. So quite a bit of a different location than where we're looking at for the subject property. Then we have the pin out by West Alexander. That property is the one that property is the property at 825 Sherbrooke Street. Again, very much different location compared to the subject property. Again, it would be our position that rent is not really reflective of what we'd be expecting for the subject property. Then you can see that there's a number, as well as there's a property on 1200 Portage Avenue. That would be comparable comp number 5. So that's located almost in the Wolseley area. So again, we would feel that location would be quite a bit different, would not be comparable to what we'd be looking at for a property in the subject property or in the area for the subject property. Then if the board turns with me to the next page, page 6, we have a bit of a zoom. Page 6 and page 7 are a bit more zoomed in. So you can see a significant cluster of the comparable properties are coming out of the Exchange district. We would feel that the Exchange district would be certainly a superior area compared to the subject property where it's located, just in terms of the rents that they could achieve, as well as downtown. So reason we provide this really is just to suggest to the board that the comparables that are being brought forward by the city would all be considered superior and would not necessarily be reflective of what the rents the subject property would be able to achieve are. If the board turns with me back to page 2. So this is in regards to the information provided on page 10 and 11 of the assessor's brief. You can see that the property owner is identified as Meadow Development Limited, and it was stated that the tenant within the property is MMF, so Manitoba Métis Federation. So here we can see what we're looking to show is that there is a link that MMF and that Meadow and MMF are actually tied together. So the Métis Economic Development Organization, or MEDO, is a business investment and management firm that works with the MMF to make key business decisions based on generating profits and building capacity for long-term sustainability for Métis within Manitoba. And then if we look on page 4, we can just see the structure of how the organization works. So MEDO and Manitoba Métis Federation, MMF, work together. So the lease that would be in place for the property would not necessarily be an arm's length lease, but because that would be between 2 related parties. So again, what we're seeing in terms of the information recorded would be more an accounting entry versus what the lease would be if this property were listed on the open market. With that, that concludes my rebuttal. I welcome any questions from the board or from the assessor. Thank you.
Thank you, sir. Mr. Spacek.
I have no questions. Thank you.
Ms. Nesbitt.
I have no questions. Thank you.
Thank you, Ms. McFadden.
I have no questions either.
Thank you. Summation, either party?
Not for me, thank you, Mr. Chair.
And Mr. Chair, I think we're okay. I think everyone probably got the sense of where.
All right. I think we've heard all the scheduled items, so this hearing is now adjourned. And thank you both for your presentations. And Wesley, results very soon.
Excellent. Thank you very much, Mr. Chair.
Have a good day.